Welcome investors to the 40 Finance channel. Today we're going to talk about the Microsoft Activision deal and what it means for Microsoft stock, not only this year, but heading into the future. And if you missed the headline, Microsoft to acquire Activision Blizzard for $68.7 billion. It's an all-cash deal. CEO says the deal will play a key role in the development of metaverse platforms. And this little slide here on The Verge gives you an idea of the properties that they have basically purchased through this deal. So they get the Call of Duty, Diablo, Overwatch properties, as well as Candy Crush or King, mobile gaming, StarCraft, Warcraft. These are some of the franchises that will ultimately make their way over to Microsoft in this deal. And we see here it's Microsoft's biggest push into gaming. The company says it will be the third largest gaming company by revenue behind Tencent and Sony once the deal closes. The deal, by the way, is expected to close in the first part of 2023. I watched a couple interviews about hey, could regulation tear this deal apart? And the consensus on it is that the video gaming sector by itself is so competitive, particularly mobile gaming, where this Candy Crush sits. Both sides feel good that it'll be able to get through regulation and monopoly concerns and all those things that go into big acquisitions like this. All right, so what did Microsoft get from a company perspective? I'm just going to go down here to the income statement. Last 12 months, Activision brought in over $9 billion in revenue. It is a company that has a profit margin of about 30%, operating margin of 36%, and at least according to Yahoo, they have $10 billion of cash on their balance sheet. $3.6 billion in debt. And interesting to note in this day and age, this is a profitable company, okay? So you see the EBITDA, diluted EPS last 12 months, $3.37 a share, and even quarterly earnings growth year over year in the single digits. But it is not without its problems, as I'm sure most of you who are following this deal know. Activision has had a lot of problems with harassment complaints and rumors of a bad culture in the company. There's been significant calls for the CEO to resign. And prior to this Microsoft news, this stock had dipped considerably into the 60s before bouncing back up. You can see here today, plus 27% on the Microsoft news. So you've got culture problems for sure, but in my opinion, this is setting up to be just the cure that Activision needed. So when I look at this deal from a high level, I see a lot of benefits for Activision and Microsoft. The synergy is obviously there. Microsoft owning Xbox, right? Having franchises like Minecraft under their direction, as well as having a whole world of PC gaming that they basically rule over, right? So for me, it makes a ton of sense to buy into a beaten down company like Activision, who the only reason they're really beaten down is because they have major cultural problems that they're going to have to work through and likely pay off some settlements in the near future. The big thing, though, that you get with Activision beyond just the franchises and the titles is the talent. The demand for video game staff, programmers, marketers, social media experts, it is off the charts right now. And if that was the worst thing that Microsoft got out of this deal, then they've probably made a pretty good investment. Merging these two companies together and backing it with Microsoft's immense reach and balance sheet, I think it looks pretty good on paper. I don't think that this is a deal that matters almost for 2023 and probably not even 2024. But when you think about the long term, and you saw the clip in there, from the CEO talking about the metaverse and where that might grow and what that might be, this is exactly the type of acquisition for Microsoft that I think makes a lot of sense. All right, let's take a look at Microsoft today. It's down just a little bit, 1.39%, but you got a NASDAQ that's down almost 2%, and you have a stock with Microsoft, to be fair, that's trading a little bit above what we've seen in past history. Certainly if you go back to pre-2020, this is one that had a forward PE in the 25s, 26s, and obviously interest rates are low, cloud computing is up, and all the wonderful things that they've done. It's trading for a slight premium right now. That being said, I certainly am not going to be the guy that tells you that there's ever a bad time to buy Microsoft stock if you're planning to hold for the long term. All right, so you remember we talked about Activision. We talked about $9 billion over the last 12 months. You know, that's not really going to lift Microsoft to any sort of new levels, considering what they've generated themselves over the past 12 months. This purchase is definitely an investment for them. They are looking to acquire, you know, assets, franchises, talent, all those things that will push them into incremental profits over the next 5 to 10 years. That's how long it's probably going to take for this deal to pay off into the green, but it seems like it has the potential to do that. Now, what about the price? If it was going to be 68, 69 billion, well, we know Microsoft has total cash on hand, the most recent quarter, of $130 billion. So yes, technically, that chops their savings in half if it would even really be calculated that way. But keep in mind, when you're a company like Microsoft, Google, Facebook, etc., having this much cash is a burden. It is a burden because it doesn't make money like the rest of your business does. So if you can find investment opportunities that will pay off with some sort of compounding return that they've calculated before they made this acquisition, then getting rid of some of your cash holdings isn't necessarily bad news. All right, so if we look back in time to a similar acquisition, you know, Microsoft did purchase Minecraft, which is a very interesting game in the sense that the revenue for it doesn't seem like it would add up. They sell the licensed copies for $20 or so across every platform, and Microsoft paid $2.5 billion for that. And this was way back in 2012 when they bought that. November of 2011, prior to the purchase, Mohang did a full release, spread rapidly, and crossed 100 million registered users. In the same year, Microsoft announced that they would buy Minecraft for $2.5 billion, which was almost 20 times the profits reported by Mohang in 2013. So similar in some ways to the premiums we're seeing on the Activision deal, just on a larger scale because Activision's a larger company. And what went on to happen under Microsoft's guidance is they've sold, you know, hundreds of millions of copies every single year since then, growing the popularity of a game that really hasn't changed that much. And it says Microsoft has sold roughly 100 million copies after the acquisition. That accounts for an almost $1.5 billion in revenue alone. But apart from these sales, Microsoft-themed products make a lot of buzz, including official Minecraft Lego sets, merchandise, and even novels. So the reason I call this out is Minecraft is a relatively simple game, and it doesn't even have all the feature upgrades and stuff that modern games have, yet it's turned out to be a fantastic investment over the long term for Microsoft. And I think the Activision deal, particularly when I think about the resources and staffing that they're acquiring, my hunch is that it's a Minecraft deal on steroids when you think about all the things that go in to a big company like Activision Blizzard. Okay, so in terms of Microsoft stock today, I'm not sure that the Activision deal means that you run out and buy shares at any price with no regard for the future. I think that if you own Microsoft shares, then it's a definitive hold, just like it was 2 weeks ago, and nothing has really changed. And if anything else, I think that there's a bright light for the future. Now, if you don't hold a Microsoft position and you're wondering, should I buy into Microsoft on this news? I wouldn't let this news prompt a purchase of Microsoft. I think you have to be much more in line with the cloud side of the business and the stuff that they're doing there. And even though this turns them into the third largest video game company, just keep in mind, similar to Sony in some regard, it's a gigantic corporation. Video games are helping it get bigger, but it's not the most pure play from a video game perspective. Now, if you're looking for a target price, you got that forward EPS right now of 10.55, and then it's the valuation multiple that you have to settle on. Microsoft's trading about 37, 38 times, I think we saw on the last board. Maybe you try to get in below 300 if you're lucky. That would be a forward PE of 30. If you want to go back to historical times and say a 25 on forward PE, which is much more in line with the history that we've seen in the past. I'm not sure you're going to get that, but that would put Microsoft, somewhere in the 260 range if we were to see some type of correction. Now, in terms of this 10.55 estimate, it wouldn't surprise me if that got to $11 or $12. When you look at the EPS trend for Microsoft, particularly of late, analysts have been upgrading across the board. This is just the last 90 days. The averages went from $10.11, and they've basically added 45 cents to it. We'll find out a lot more when Microsoft has their earnings call here at the end of January. All right, so bottom line for me on the Activision deal, I think it's a great deal for Microsoft. This is a company that's so big, $175 billion in revenue. It's always going to be a struggle to find impactful revenue growth opportunities. Acquisition seems to make sense here, at least with this one. Keep grinding through the video game metaverse world, see what you can build there. We know that it's a hot market right now. So for Microsoft to get a leg up on the competition by acquiring another company seems to make a lot of sense. Just don't expect this deal to move the needle in 2023 or 2024, particularly when you think about some of the trash that we kind of need to clean up over in Activision. This is going to be a 2025 and beyond acquisition when we start to look back and say, oh crap, they brought this thing together with their existing resources and really turned it into something. I think Microsoft's a company that you can feel good that that's going to happen. All right, so if you have Microsoft shares, you're obviously holding them. There's no reason to sell on this news. If you're looking to get in with new shares, I think given the market weakness and the valuation multiples that we see coming down, we definitely try to target under 300 for this stock. And the closer you get to the 260-ish level, probably the safer you are towards the very floor of a quality stock like Microsoft. All right, guys, hope you enjoyed this video. Please give a like and subscribe if you did. We'll see you on the next one.